Thanks, Tom. Morning, everyone. My presentation takes a somewhat different slant from most of the other speakers we've heard this morning, in that I'm looking at the construction sector from the outside in and really asking the question, what is the Irish economy going to do to help or to hinder the construction sector over the next 2 to 3 years and even into the longer term? And I think the peculiar animal that is the Irish economy has very important implications for the sort of construction sector we have. To summarise my presentation, I'll make 3 points. The first is that over the next 2 to 3 years, the Irish economy, clearly recovering now, is going to be a source of very substantial positive momentum to the construction sector. Looking a little bit beyond that, and there's quite a lot of uncertainty about the global economy at the moment that we have to take account of, but looking beyond that, I think there is a sense in which the construction sector in Ireland is going to benefit from a potentially much stronger Irish economy. And I think a key task is going to be how we get from the current size of the construction sector to a construction sector that I think could be 2, maybe even at a stretch 2.5 times bigger than it is today. The third point is the caution. You have to be a two-handed economist. And that's that the Irish economy really lacks a calming mechanism. It tends to have very extreme periods of ups and downs. And that has huge implications for the construction sector, because it means the construction sector itself has to be either very flexible or else very capable of self-stabilizing. And that's a really, really difficult task for construction. What I propose to do is look at the economic outlook over the near term and then maybe go a little bit further. But first of all, this graph suggests that, and I hope you can hear me, that this graph suggests the fortunes of the construction sector are very closely linked to the economy. When the economy, which is in blue there, tends to have good times, the construction tends to be very, very good, as you see in 1979, 80, as you see again at the end of the 80s, and you see at the Celtic Tiger period as well. But when the economy is bad, a bit like the nursery rhyme, the construction sector tends to have it really, really awful. And you see that obviously through the 80s, you see it again much more recently. So the construction sector tends to be disproportionately affected by the swings in the Irish economy. It contributes to those swings, but it's also affected by this dynamic of what tends to be a quite unstable Irish economy at times. So what I want to do now is consider the economic outlook. And the first thing to be said is no one knows what's going to happen tomorrow. But we're beset at the moment by particular uncertainty, partly because what's happened over the last couple of years, and partly because the world just seems a more difficult place. So I could spend the next 15 minutes talking to you about Brexit, about all the implications there. We could talk about, will there be huge damage when US interest rates go up? Will there be huge damage when China slows down? And the reality is, no one can say definitively what's going to happen in each of those instances. But what we can say is that the world is capable of muddling through. And I think that's what we're going to see over the next while. It's going to be a case of a recovery that's 2 steps forwards, 1.5 steps back. Importantly, policymakers around the world know how fragile things are, and as a result, they're acting in a much more enlightened way than they were 3 or 4 years ago. So that's a very important element. The particular shape of the global economy is also quite important. This graph shows you unemployment rates. In green and in red, that's the US and UK, where unemployment has tumbled down to about 5.5%. Really good, because the FDI is closely related to what's happening in economic conditions in the US, and many of our domestic firms treat the UK like a domestic market, so the fact that there's strong demand in the UK is hugely important to us. So that's a very good set of circumstances. The blue is the Eurozone unemployment rate. It is improving. It's down from 12 to 11.1%, but it's quite fragile. And while we trade hugely with the US and UK and are important for investment, we get our interest rates from the Eurozone. So the fact that the Eurozone is more fragile is keeping borrowing costs low, and it's also keeping a lid on the euro and making Irish companies much more competitive. So this particular set of economic circumstances internationally is quite positive, particularly, as I say, in terms of the distribution of activity from US and UK and interest rates from the Eurozone. Speaking of interest rates, this gives you a sense of what financial markets think will happen to interest rates over the next couple of years. And what it shows you there at the very bottom, the cost of 3 months' money in the wholesale market now is about 0. By the end of the year, people think that will have surged to 5 basis points. That's not 5%, that's not 0.5%, it's 0.05%. By next year, they think it will be up around 14 basis points. And then by 2017, the European Central Bank is expected to raise interest rates up to nearly 0.5%. By the end of 2019, financial markets now think interest rates in the Eurozone will be just over 1%. Now, I'm not telling you that interest rates are never going to rise. They are going to rise. I'm going to probably tell you that this may be too optimistic because, as you see, the financial markets change their mind quite a lot. But it is telling you that for the next couple of years, low interest rates are going to be a tailwind helping the Irish construction sector. I would ask, again, the two-handed economist in me, that it means that if you're gauging a project's viability, you can't always expect interest rates to be this low. But we are going to get a bit of breathing space over the next while from lower interest rates. So that will help. If interest rates are going to remain low, it's because inflation and economies remain weak. And that blue line shows you what's happening in the US to consumer prices, which is the goal of their central bank of Federal Reserve to keep under control. But that volatility goes elsewhere. And that shows you what's happening to US house prices. So at a time when inflation generally is very low, there's wild swings in prices in other areas. And that's going to remain a problem for the construction sector over the next couple of years. So volatility is going to remain an issue internationally. And volatility has been the story of the Irish economy. What we see here, whether you look at it in GDP, which is in red, employment, which is in blue, or house prices in green, we had this steep climb through the boom years and a sharp collapse through the downturn. Encouragingly now, we're seeing a little more steady sort of improvement, first of all in GDP, then employment, then in the property market. So the Irish economy is rebuilding momentum, and we expect that to continue for the next couple of years. Significantly, the early part of that reflected the fact that exports were doing well. Now we're starting to see domestic demand click in, and that's probably the key element in terms of the construction sector outlook. And this is a story you all know well, but you probably haven't looked at it in terms of these sort of statistics. It tells you the adjustment in the budget situation in Ireland. And a massive, massive adjustment did bring the deficit down. But it absolutely decimated spending power in the economy and decimated the construction sector, among many others. What you see now is progressively the deficit has come down, the extent of the pain is easing, and if you look at it and you really have an optimistic disposition, you see that little blue line at the end, the government now putting money into the economy. And we're moving to that point where you would expect to see household spending power being boosted by budget policy, and therefore giving people more money in their pocket to think about buying a house, to think about the various construction needs, and also, importantly, as we've heard from a couple of other speakers, the public capital programme again becomes an issue rather than just something to slash. So we are starting to see an important turning point in the Irish economy, and that should continue. That turning point has built confidence, and this is our consumer sentiment measure, and house prices. And big deal, it's not really surprising that the two go close, hand in hand together. So during the boom, confidence, house prices moving very sharply higher, through the downturn coming down. Significantly, confidence now coming back. People believe they will have spending power. People believe there will be jobs. People believe that the worst is over. There's no huge feel-good factor in the Irish economy, but the feel-bad factor has eased very significantly, and that is critically important. If people are afraid of opening their doors in the morning, they're certainly going to be afraid of doing anything that might involve a long-term financial commitment. And by people, I don't mean just household, I mean businesses as well. Construction needs a confident Irish economy, and it's starting to get it. Construction also needs credit, and you will start to see that turn. Again, it's very gradual. This graph shows you in red the lending of Irish banks, in blue the deposits of Irish banks. We know through the boom lending ran way ahead of deposits. We know the various problems that caused. Now we're back in a more balanced situation where banks can start to think again about lending, and that will progressively build over the next couple of years. Credit isn't going to be free and easy like the boom time. We're not going back there. But we should see an improvement in credit. It will be limited by new regulation. It will be limited by significant legacy issues, the non-performing loans that banks still have. And it will also be issued by corporate memory. But we are still starting to see a turning point in the credit cycle, which is hugely important to the construction outlook for the next couple of years. If there's more credit available, will people actually want to borrow? There's no doubt that people have been hugely scarred financially and psychologically by what's happened over the last few years. The blue line shows consumer borrowing and how even in a downturn people have tried to reduce the amount of debt they have. That's come down quite significantly. Will it go up again? I think it will, but at a more normal rate. And one of the reasons why I would be optimistic the consumer isn't an entirely spent force is if you look at the red line there, the turn in car purchases. Again, it's telling you of a consumer who's starting to look over the parapet, feel a little bit more optimistic, feel there is a future in the Irish economy, and beginning to think about spending. If we have demand increasing, if we have credit, what then about supply? I could simply just say over to you, but an economist never does that, right? What I show you here is what happened when there was previous surges in demand. Historically, when demand is strong, prices rise. But this, where we're just looking at house building particularly, you see there's virtually no increase in supply to speak of until the disaster of the last few years. So we need to find a way in which supply is more responsive. The initiatives the Minister mentioned this morning will be helpful in this regard, but there is a long, long way to go if we're to get a construction industry that's capable of responding to fairly sharp changes in demand. Another problem that arises in this regard is the price right? And this is from an ECB report, a recent European Central Bank report. And what it shows you there is that Ireland, they think house prices are still undervalued, but they could be either 20% undervalued or 15% overvalued. Good economics answer. It's somewhere between +10 and -20. So we do have a problem with valuations. More importantly, when we move through the next while, the issue is what happens to the Irish economy. That's the euro area economy in red. That's what happens normally in Europe. That's what happens to the Irish economy. We tend to have very volatile cycles. This is the unemployment rate in Ireland in red and blue in Europe. And what it tells you is the demand conditions, the demand for construction output tends to fluctuate really, really dramatically in Ireland. This is part of the reason why our population structure is entirely different. Our natural births minus deaths is about 10 times the rate of growth in Europe. It's closer nearly to Africa than Ireland. And the migration fluctuations, we can have a population that's growing by 2.5% because of migration or falling by 1%. That makes it very difficult to right-size your construction sector. What this would normally call for is that policy calms the market. But instead, what we've had in Ireland is that policy tends to aggravate the cycle. And with an election coming up, that's going to be the case over the next while. I think that's a huge issue. And finally, if you look at the construction sector itself, what this graph does is compare the Irish construction sector in blue and other European ones in different colours there. You can see we're about 6% of GDP at the moment, the others are about 12%. Because of FDI, because of the age structure of the population, because of huge deficiencies in our infrastructure, I think a medium-term aim could be 12 to 15% of GDP, a bit more than Tom was suggesting. The critical issue is how do we get there? Because in the past we've got there like a drunken sailor. We've gone from 20 to 5%. In a volatile Irish economy, the construction sector faces an extra challenge. How does it stabilise and give a coherent, sustainable future to the sector in an economy that's going to remain volatile? So to conclude, believe it or not, there was some optimism in there in case you missed it. The Irish economy is now building, and importantly it's broadening, so it's not just based in Dublin, it's starting to spread out of the economy. It's still uneven, but domestic demand is picking up. The sins of our fathers are with us again in terms of property markets that reflect overshooting because of undersupply and huge, huge volatility. There is a real risk that in the economy as a whole we return to a roller coaster. So what does that imply to the construction sector? How do we actually ensure that we get an economy and a construction sector where wealth is spread, wealth is shared, and not one where the recovery is squandered? Thanks for your attention.